Hello young traders, doing trader once again from DRFX, Swing Trading Mentoring. I'm going to be taking a look at 8 currency pairs that I think could provide us with trading opportunities within the next 24 to 48 hours based on the nature of the consolidation patterns and the strong trends that have been formed so far on the respective daily chart and 4-hour charts. Now when it comes to trading consolidation patterns, there are generally 4 types of consolidation that I try to identify and trade when trading the daily chart and the 4-hour chart. What I do is to spot either ranges or one of these 3 types of pennants. Ranges are where the market would form horizontal boundaries of resistance and support, whereas with pennants, the market can form 3 types of pennants, where the resistance and support boundaries can be formed at different angles to each other. So these are the 4 main types of consolidation patterns that I normally try to trade when trading on a daily chart and a 4-hour chart. Now, having identified a consolidation setup, there are actually 4 market setups that I also trade when it comes to these setups. The first is that we would identify a consolidation pattern that has already been formed and trade between the boundaries of resistance and support. The second setup is where we would spot currency pairs that are in the early stage of forming consolidation. So what we would do is trade the early bearish and bullish waves that lead to the formation of consolidation. The third setup is where we trade the breakouts that take place from consolidation, which, as you know, normally lead to fast and aggressive trading gains. And so these are the types of setups that we also trade that can provide us with strong trading opportunities. The fourth setup is, of course, where we trade false consolidation breakout reversals, where the market will attempt a breakout at one end of the consolidation and then reverse sharply to take us back inside of the consolidation, and in most cases start a breakout at the other end of the consolidation. So these are the 4 types of market setups that we would trade when it comes to trading either range consolidation setups or one of 3 types of pennant setups that we see on the daily chart and the 4-hour chart. Now, very important when it comes to trading these consolidation patterns is to trade in the direction of the main trend direction. So if we're talking about trading the early waves that lead to the formation of consolidation, trading the waves after the consolidation has been finally completed, or trading consolidation breakouts. The best trading opportunities are the ones that are taking place in the main trend direction as identified on the daily chart or the 4-hour chart. Because basically what is taking place is that some of these movements within consolidation are risky and some of them are more stable and reliable. The ones that are moving in sync with the main trend direction tend to be the ones that provide us with the most reliable signals, whereas the ones that are taking place against the main trend direction generally provide us with risky and volatile setups. So that is why whether we're trading in an uptrend or a downtrend, the preference is to trade the signals and the movements within consolidation that are in sync with the main trend direction, because it will provide you with additional market momentum and trading volume compared to the ones and the movements that are taking place against the trend. So that is a very important consideration when it comes to trading within the consolidation setups. Of course, we also have to be very careful in terms of the signals that we trade, because we can identify where the market is going to be headed towards, but if we are trading signals that are too weak, then we run the risk of actually incurring a trading loss. So these are types of bullish and bearish signals that we need to look out for when it comes to trading these movements. But it is very important that these signals are strong so that we can be assured that they will lead to profitable trading opportunities. Now, in terms of the situation on the Aussie Canadian dollar, basically we have a situation in which the market is in the latter stages of forming and completing our range consolidation setup right here on the 4-hour chart. Now, even though the market could continue this bullish rally and provide us with a trading gain as it makes its way towards resistance, my preferred option is to trade the bearish movement, because this would be in sync with the current bearish direction on the daily chart. Here you can see the main trend direction on the daily chart, where this currency pair has been in a strong downtrend for quite some time, which has led us to create this outer downtrend line as well as this inner downtrend line. So the bias is definitely bearish in favor of the Canadian dollar. And so what we would do is to wait until the market rallies and then U-turns and provide us with a bearish signal and then trade it towards support. Because these bearish movements, since they're in sync with the main trend direction, are like to provide us with more stable signals compared to the ones that are against the main trend direction. Moving on to the US Canadian dollar. Similar situation on the 4-hour chart that has formed a range consolidation setup. You can see here that the market has pulled back towards this support, towards the support boundary. And you can also see that it has done this in sort of a volatile fashion. So this signal was very large, and then the market moved sideways for a little bit with these spikes. And then by the time it provided us a signal, it was basically already too close to the support boundary to provide us with any meaningful pip trading gains. So this would have provided probably just 10 or 15 pips based on where the market closed this candle. So an example of the volatility that normally takes place when we're trading against the main trend direction. Now what could take place is that, or what we would prefer is for the market to provide us with a trading opportunity in sync with the main trend direction, which as you can see here by this uptrend line is definitely bullish in favor of the US dollar on both the 4-hour chart as well as the daily chart. Now there are 1 or 2 ways in which the market could provide us with this bullish U-turn. It can either do so by U-turning at the support boundary, or it could do so after temporarily breaking up below the support boundary and then providing us with a strong bullish reversal. So these are generally the 2 types of possibilities when it comes to the market heading back inside of the consolidation. Now taking another look at the situation in terms of what is now taking place, you can actually see that the market did in fact break below the support boundary and then U-turn with this strong bullish engulfing candlestick formation. So this is definitely starting a false consolidation breakout reversal, taking us back inside of the consolidation with the expectation that the market is at least going to head back to the resistance. Now in terms of a trading opportunity, my preference would be to wait until the market provides us with a temporary pullback and another bullish signal. The reason for this is that this extraordinarily large candle has an element of risk because it can sometimes indicate, or in most cases, indicate the temporary end of a movement. So what this could actually lead to is, well, it could actually rally a little bit, but in most cases what it normally does is to lead to a temporary pullback that then provides us with another setup to continue and confirm the movement in the indicated direction. So that is what I would wait for. It will be a little bit risky. It might work out, but it will be a little bit risky to actually enter the market now. Placing a stop loss below the low here and then holding out until the market eventually reaches resistance. But my preference, based on what I've seen how the market works over the years, is to wait until the market pulls back and then provides us with another signal to provide us with a better entry opportunity to take advantage of the movement bullish. Moving on to the Aussie Swiss franc. Again, another situation of a pennant of a consolidation setup that has been formed on the 4-hour chart. This one taking the form of a pennant with a horizontal resistance boundary and a support boundary that is formed at an angle. Now, taking a look at the daily chart, you can see that the main direction is bearish. Based on these downtrend lines and the fact that we have been breaking out of this pennant consolidation setup. So the momentum is definitely bearish, and so the preference would be to wait until the market provides us with bearish signals at resistance that would take us down towards the support boundary. Euro Swiss franc, similar situation on the 4-hour chart, where the market is basically in the process of completing a range consolidation setup. Market is expected to continue the bullish movement and take us up towards resistance. But my preference would be to wait until the market hits resistance and then provide us with signals bearish, which will be more in sync with the main trend direction. So taking a wider look on the 4-hour chart, you can see the strong downtrend that has been in place, creating this outer downtrend line as well as this inner downtrend line. You can also see the market has been moving sideways as it broke above the inner downtrend line and is now basically between the inner downtrend line and the outer downtrend line. But since this outer downtrend line is still holding, the preference would still be to look for bearish opportunities. So that is why my preference would be to wait until the market provides us with a bearish signal and trade in this direction. Euro US dollar, also in a strong downtrend on a daily chart. My expectation is that the market should hit the support target at 1.0263. Now, as part of that expected bearish movement, this range setup that has been formed on the 4-hour chart is expected to provide us with a bearish reversal that takes out this bullish attempt. So you can see that the market attempted a strong breakout with a strong candle, but this has now reversed and has taken us back to resistance, where the expectation is that, assuming that it will hit the support target, it will head back inside of the consolidation and break below the support boundary. Now, moving forward in terms of what is actually taking place, you can see that the market has actually pulled back below resistance within the consolidation, but has now rallied a little bit. So assuming that this bearish momentum is going to continue, at this stage we're expecting the market to provide us with a strong bearish signal that would confirm the movement bearish. However, despite the fact that the market did provide us with a bearish signal in the form of an evening star, this signal was a little bit too weak. So what it does is that it increases the chance of a reversal that could take out this signal instead of continuing the movement bearish. Now, technically speaking, this is a bearish signal, so it does have a chance of continuing the movement bearish. But because of how weak it is, there's now an increased chance of a reversal that could take out the signal. Pound Japanese yen, also in a strong downtrend. And so, of course, we're going to be looking out for trading opportunities that are in sync with this bearish momentum. Taking a closer look at the 4-hour chart, you can see that the market has moved above this inner downtrend line, but is still below this outer downtrend line, still keeping us in a strong downtrend. And so, assuming that the market is going to continue the movement bearish, one of the possibilities is for the market to provide us with a double top signal. So that could come after the market rallies a little bit and then U-turns at this area here, providing us with a strong bearish signal that would eventually break these two uptrend lines and then start the breakout bearish. So that is what we're going to be looking out for in terms of a trading opportunity to continue the downtrend in favor of the Japanese yen. So as you can see, in terms of the current situation, the market has continued to rally as predicted. And so what we would need right now is for the market to U-turn at this area here and then provide us with a double top signal. Aussie Kiwi. This one is in the latter stage of forming a range consolidation setup on the daily chart. And what is taking place now is a strong rally following the formation of this second support point that is expected to take us up towards this resistance area. Taking a closer look, you can see that this resistance boundary, resistance price point, is actually at 1.0728. And so, assuming that the movement is going to continue bullish, what we're going to be doing is to look out for strong bullish signals on the daily chart to confirm the continuation of this movement. So once the signals are strong on the daily chart, we're going to be looking to see if we can take advantage of this and capture strong trading gains as the market eventually makes its way towards this resistance area. New Zealand Canadian dollar. This one, the opposite situation, where the market is moving bearish in a strong downtrend, which, as you can also see, started with a strong double top signal. So the expectation is that the market will hit the 0.8319 level within the next several days. And so to take advantage of this expected movement, we're going to need the market to provide us with a strong bearish signal that would confirm the continuation of the movement bearish and provide us with a trading opportunity as well. So that's it in terms of the situation on these 8 currency pairs, which could provide us with trading opportunities. The ones that stand out right now are the US Canadian dollar, the Aussie Kiwi dollar, as well as the New Zealand Canadian dollar in terms of possible signals. So those will be the ones that are right now very close to providing us with signals that are in sync with the main trend direction, and so which would have a higher chance of providing us with a strong trading opportunity. So of course, if you have any questions, you can let me know by emailing me at shepherddoing@gmail.com. You can also find me on Instagram at DRFXTradingBoss, as well as on my website swingtradingmentoring.com, where you'll find a full description of the trading methodology that I now use, as well as the swing trading services that I provide over 3 months, as well as over 6 months for my VIP clients. So until next time, traders, happy trading.